Welcome back. You're watching Buy or Sell, and it's a Tuesday. It is time to discuss mutual funds. Let's welcome in Anil Rego. He's CEO and founder of Rights Horizons. He's joining us from Bangalore. Anil, welcome to NDTV Profit. Now, in this recent up move of the equities, we've seen gold also look really strong and move up very high. Portfolios for those who hold gold ETFs has swelled. Would you recommend that people then start booking some of their profits, or should they hold on to ETFs? Because the line of thinking is that gold ETFs are a hedge against inflation. They're not really there to give you 30% returns. What's your advice?
Sure, I think for somebody who's made some good money on gold ETFs, I think partially profit booking is a good idea. Okay, for somebody who doesn't have it now, should you include it today? Yes. We need to have some bit of gold there more as a portfolio insurance, because let's say in case of a big fall like we saw earlier, you find gold doing pretty well. So good to have as a part of your overall portfolio a certain percentage, maybe 5% or so. And for somebody who's already made some money on it, you can partially book profits there.
Okay, that's ETFs. What about gold mining funds? What are the opportunities offered by investing in that space?
Sure. Gold mining funds, is a higher risk return equation and one must appreciate that. So maybe it's important to do it like through a systematic investment, keeping that risk in mind. Basically, they invest in overseas gold mining companies. It indirectly invests in a feeder fund, which is another mutual fund which globally which invests in gold mining companies. So this can be pretty volatile, but the upside can be also that much better there.
Okay, any particular risks you want to flag off in the risks and rewards in the context of these mining funds? Because I'm sure viewers would be keen to really know what do they need to keep in mind as they look at investing in gold mining funds.
Sure, gold mining funds can be very volatile. So if there's a fall, you can even find a 20-30% down there. Okay, so that's why it makes sense to not invest lump sum at this point of time. Gold is already run up a little bit, so maybe either do systematic investments, or if you have a lump sum, put it into a debt fund and then do a systematic transfer into the gold mining fund companies. Two funds which are there, you can look at maybe Tata AIG. They are World Gold Fund, as well as DSP BlackRock has a World Gold Fund. So you can choose from any one of these. I think both are performing pretty well out there.
All right. So if you are willing to take some more risk, perhaps one of those two funds you can look at to put it somebody. What are your top picks in the different fund categories, Anil, when it comes to ELSS, large cap equity, mid cap, small cap equity, as well as debt funds?
Sure. ELSS, I would go by maybe a Sundaram tax saver, a HDFC tax saver, and maybe a Canara Robeco equity tax saver. On the mid caps, you could have, basically you can break it up into two parts, maybe a combination of mid cap plus small cap. You can look at funds like, IDFC small and mid cap fund and the Sundaram Smile. A pure mid cap type of funds, you can look at Sundaram Select Mid Cap. You can look at Reliance RSF. You can look at maybe ICICI Discovery Fund. Large caps, you can look at funds like DSP BlackRock, top 100. You can look at HDFC top 200, or maybe even Birla Sun Life, the Frontline Equity Fund.
All right. Thanks so much for joining us, Anil, giving us your views on gold funds, on all that is happening in the mutual fund industry, as well as your picks in the different categories. Pleasure having you with us on this Tuesday, taking your views on mutual funds. Well, that's the time that we have on Buy or Sell. Remember, it's a Wednesday tomorrow, and we will take up your queries on F&O. So if you have questions, whether you hold futures positions or options positions, send them to us. A guest will be joining us, and we'll help answer all your queries.